Hey everyone, and welcome back to Trading Club Q7U. Today, we're going to tackle a roadmap that will help you go from an absolute beginner to a consistent trader. Now, I know this might sound like a bold claim, but we're going to break it down step by step, so you can see exactly what it takes to get there. First, let's define what it means to be a consistent trader. A consistent trader is someone who can achieve their trading goals on a regular basis, which doesn't mean they are going to be profitable every single day, but they know how to trade in a way that ensures they are making money over the long term. It's not about being perfect, it's about understanding the markets, managing risk, and sticking to a plan. Now, let's talk about why this matters. The reason you want to be a consistent trader is that you can use your skills to make more money over time. And the key to making more money is to minimize your losses and maximize your wins. But most new traders don't know how to do that, and here's why. Most new traders don't have a clear understanding of how trading works, and they are usually confused about a few key concepts. So, let's take it from the beginning. Trading is all about predicting price movements, and the most basic way to do that is to look at the price chart and try to identify patterns. Now, I know some traders might be thinking, but what about technical indicators or fundamental analysis? Well, those are all important tools, but we're going to start with the basics. Let me give you a simple analogy to help you understand. Imagine you're at a party, and you see a group of people clustered together. You might think that's a good place to stand, right? You're surrounded by other people who are interested in something, and you're more likely to have a conversation. But what if the opposite is true? What if the group of people is actually moving away from you? You wouldn't want to be stuck there, right? That's kind of like a price pattern. You want to identify trends that are likely to continue, so you can trade in sync with the crowd. Now, let's talk about some common mistakes beginners make. The biggest mistake is overtrading, which means jumping in and out of the market too quickly, trying to catch a quick profit. But this leads to a lot of losses, because they are not giving themselves time to see the whole picture. They are making decisions based on emotions, not on a clear plan. Another common mistake is undertrading, which means being too patient and missing opportunities. This can also lead to losses because you're not taking advantage of the markets when they are moving in your favor. To avoid these mistakes, you need to develop a clear trading plan. This plan should include things like your goals, your risk management strategy, and your entry and exit criteria. By having a clear plan, you can trade with confidence, knowing that you're making decisions based on facts, not emotions. Now, let's talk about a practical exercise you can do to put this into practice. For your homework, I want you to choose a demo account or a paper trading journal and practice identifying price patterns using a simple strategy. Let's say you choose two different stocks, for example, Apple and Amazon. Both have a similar market capitalization, but Apple has been experiencing a downtrend over the past year, while Amazon has been on the rise. Using a simple moving average strategy, let's calculate the 50-day and 200-day moving averages for each stock. If Apple's 50-day moving average is below its 200-day moving average, that could be a sign of a downtrend. On the other hand, if Amazon's 50-day moving average is above its 200-day moving average, that could be a sign of an uptrend. Take notes on what you see, and how you could adjust your strategy to make it more effective. Consider different entry and exit points, risk management techniques, and how you can adapt to changing market conditions. Don't worry about making a profit, just focus on building your skills. In our next lesson, we're going to talk about how to develop a trading plan that works for you, not against you. We'll cover topics like setting realistic goals, managing risk, and adapting to different market conditions. So, be sure to subscribe to our channel, and hit the notification bell to stay up to date on all our latest lessons. Before we go, I want to leave you with a few more key concepts to keep in mind. Always remember that trading is a marathon, not a sprint. It's not about making a quick profit, it's about building a solid foundation of skills and knowledge over time. Be patient, and always keep learning. And most importantly, never get emotional about your trades. Take a step back, and make decisions based on facts, not emotions. Thanks for watching.